What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Friday, November the 5th. So, as always, nothing that is discussed on this channel, guys, is financial advice. I'm simply providing people financial education. I want to emphasize that people don't have to slave in a 9 to 5 if they don't want to. They could easily make the choice to hustle 24/7 in the market and still be able to accomplish all their financial goals, dreams, or aspirations. As always, you're going to get out what you put in, simply put. But hopefully today's video will help a little bit in making sure you get a lot more out, right? But so today on Twitter and on IG, a couple people messaged me, and they were saying that they appreciated the videos, which again, I always appreciate any feedback. I do pay attention to all of it. Again, I am a relatively new YouTuber. I've only been making videos, essentially a little bit over 2 months now. I think a month and a half, 2 months, maybe 2 months and 2 weeks at max. But so I've improved, obviously, because again, obviously you guys are liking the videos more and watching them more, so that's always a plus, right? But as I always state, I literally do this as a hobby. I don't get paid. YouTube doesn't pay me anything. I don't make anything from this. I built my own website, or had someone help me build my website, just to be able to put more information out there on myself. So people see that I can be a reliable source of information. But this is literally just a hobby for me. Like, I enjoy doing this because I enjoy stock market, right? I enjoy making money. To me, that's something fun. Like, to me, that's fun, right? I would much rather do this than like spend time playing a game or whatever, right? And nothing against people that like games, everybody's different, right? This is just something I'm passionate about. I've always been passionate about it since I've been in the finance industry for now a little over 10 years, a decade, right? But I've learned a lot. But I keep running into this question about, well, how can I do this and how can I do that? And like, I don't understand what this means and I don't understand what that means. And that's okay, right? Because that's what I want you guys to do. I want you guys to feel comfortable enough to ask me so that I can adequately provide the education you need, so that way you will know. And moving forward, you'll still be able to, on your own, start analyzing things you're interested in investing in, right? That's the goal, right? To make everybody better. And if you think that's a lie or a fake, I promise you that's truly what I believe. Put good karma into the world enough, and eventually she will come back to you. And I live by that. I teach my sons by that. That's something I'm truly passionate about. But today's video is going to be essentially a setup video. So this is essentially going to be for new setups, or someone who is new to the market, or someone who isn't really familiar with a lot of indicators. This is a newbie video, if you will. No disrespect, nothing wrong with being a newbie. At one point in time, each one of us that you see on YouTube were newbies as well. Unfortunately, most of us that have been around for a while didn't have this resource available to us, right? You kind of had to learn from your brothers, neighbors, cousins, uncle, and it was literally you were taught some, and then you had to do a lot of research to figure out the rest, right? Hopefully, I do a lot better job at that, and by the time this video is over, you will have a good sound fundamental base, how you can formulate opinions when you are trading based on indicators and tools that I use day in and day out. Some of those tools I show you guys on videos, some of those you do not see, but I will try to wrap all that in one video today, right? So as you guys can see from the chart, it doesn't matter what ticker. If you want, we can just use SPY, because that's just a straight line up. So we're going to use SPY. Now, as you see, none of my indicators are on, no moving averages, no trend lines, nothing, right? We're going to get down to the nitty-gritty basics, right? So in Thinkorswim, this little beaker that you see at the top is where you add studies, right? Or indicators, right? Well, two indicators that I always use religiously on every single stock that I trade is RSI, double click, add it over, and MACD, M-A-C-D, right? Now, MACD and RSI, what are they and what do they do? So, MACD and RSI are literally reading the candles on the chart. Essentially, they're looking in the past to give you a perspective of where we've been. They do not tell you where we will go, right? There isn't really a solid indicator that will tell you the future, right? And if there was, I wouldn't necessarily trust it, right? To be very honest with you, I trust my own sound judgment and what I see, because again, for example, in RSI, right, you have overbought and you have oversold, right? Top line and a bottom line. When you approach overbought, it's too many shares that have been bought up, right? So essentially you have to sell off, right? The middle section is neutral, right? When you approach oversold, there are too many sold shares in the market, so people are going to start buying them up, right? You kind of get an idea. If we're an overbought, there are going to be some selling, taking profit. If we're an oversold, people are going to start buying up shares. Why? Because that's an opportunity to make money, right? That's kind of looking in the past, seeing what's happening, and that way it gives you a better idea for the future. MACD is the same thing. MACD is literally reading the candles on the chart and trying to interpret when there's a buying period and when there's a selling period, right? By the dips and the rips in the chart, essentially, right? Why is it good to use these? Well, again, I'm not the guru or the know-it-all of investments, right? But when I was taught how to use these indicators, I was very clearly told from the start, day one, using these two indicators, you have a better opportunity to become profitable when you're making an investment choice versus not using them, right? Now, these are just the two that you see on every single video. There is a third that I use consistently and religiously, and that is going to be volume profile, which you see up here. For that one, you just search VOLU, go down where it says volume profile, and you double click over, add it over, right? There is another one called Accumulation, ACC, and then it's Accumulation and Distribution, right? And you add that bad boy over, hit apply, hit OK, right? So now we have all the indicators on the chart. The only one you cannot see is specifically the volume profile, and we'll get to that in a minute, right? I have it disabled for a reason because I don't want to confuse anybody. So let's get up into setting these up. So first and foremost, you're going to go back into the beaker. If you have Thinkorswim, you go into this little gear wheel for each one, and we're going to start with RSI, right? So RSI, as I mentioned, RSI has a central line, which is essentially neutral, right? Whatever. There's oversold and there's overbought. Now me, I like to color coordinate things, right? Like kind of like a traffic light. Red means stop, yellow means caution, green means go, right? So for me specifically, oversold is green because that's telling you there's going to be buying after that period has started. So that's why I label it always on every chart green. Overbought, red. Why? Because there's too many bitten shares been bought up. People are going to start taking profit. So that means there's going to be some selling, or the price is going to dip potentially, right? So that's always red for me. Let's see. The RSI, well, I usually leave it white. I'll leave this bad boy white to make it more clearly visible. Hit OK, hit apply. And now you see that the RSI looks this way, right? So again, red, caution, stop. Green, go, right? And then normally I will draw a trend line or a horizontal line across the middle to designate neutral. You just right click on the screen, hit this price level, try to draw it somewhere in the middle, right? Double click on it, and then neutral is always 50, right? Overbought is 70, oversold is 30. You eventually with time, you just memorize that, right? But you always want to do the extension over to the left, make sure it's all the way across. Show the price on the right. I like to show the price just so you have a visual there. And as I said, like a stoplight, red, yellow, green. It's just a OCD thing, call it that if you will. And I usually dash this line, right? So it's not predominant. It doesn't get in my way. I can simply see, right? So if we're here in this area, I know we're neutral, right? That depending on the ticker and what the candles are showing you, like we have this upward trend, right? And if we were sitting here in neutral, that would tell me if we were respecting that upward trend, okay, we're going to head to overbought, right? That's bullish, right? You want to enter a position as close to that neutral line as possible, right? Again, that's not always for every single investment or choice that you make, right? You have to first learn kind of to interpret the indicators, read the candles to understand where you are on the chart so that you can make a better decision, right? So that's kind of that one in a nutshell. We'll leave it at that. We eventually, by the end of the video, we'll make a full breakdown, kind of like I do when I do charts or stocks when I do my videos. I always shrink them. I don't need them to be extremely big. What I want to see biggest is the candles, obviously, because you want to be able to identify trends, support, resistance, things of that nature, right? Now, go back into the beaker, and now we're going to set up the MACD specifically. So MACD, there isn't a lot of changing that I do. The only thing that I change, right? So up signal are the green bars, right? That's how what identifies a buying period. Down signal are the red bars. As you can see, that indicates a selling period. The zero line, I don't like pink. I'll leave it at white, just my preference. Let's see here. Where is it? Here we go, value. So automatically MACD usually does value as blue. I like to use this one as green because again, that's a buying period. It just correlates in my head. Green, go, buy. Average line, usually it'll do orange or beige. I think Webull does orange. Thinkorswim, they do beige, right? But for me, again, selling period in my head is stop. So that means go down, bad, right? So I associate that to red. Again, this is just me. You can choose whatever colors you prefer. Hit apply, and then all of a sudden now we see the changes, right? So now anytime we are in a buying period in the MACD where we're formulating these green bars above the center white line, the green line is always going to be above the red line. Anytime that green line dips below the red line, it is indicative of a selling period, right? Or we're going to start forming red bars on the bottom of the center line, letting you know, okay, we have a higher propensity to get red candles in a selling period, right? Not always. It's just you have a better likelihood. If we look, for example, right here in this red period here, there's a red candle, 2 greens, 3, red, green, red, 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 green, green, red, right? Again, it's not automatic that in every selling period, you're only going to get red candles. It's just an indication that you have a higher rate or ability to get red candles or red days, right? During buying periods, you have a higher propensity to get green days. Perfect example right here. This conversion right here. I'll zoom into this. Go right there. So you had 1, 2, 3, essentially 3 or 4 red days here, and then you started this buying period, right? Once you started the buying period, look at how many green candles we had consecutively. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 green candles in a row. Why? Because in a buying period, we have a higher propensity to get green candles. That's why it's important. Once you start a buying period and you've learned that in your head, let's say there's only 2 green candles in, but you're like, oh man, we're in neutral and we're in a buying period on MACD. Okay, that's a trigger. That means we're going to head up, which means we'll have a higher chance to get green candles. This is a good place to enter a position. And you would want to enter a position on this candle here, right? For example, so that you can enjoy this nice wave up, right? If you get a red candle, automatically you know, okay, we're getting close. Depending on how close these lines are to converging together, then you automatically know in your head, okay, you know what? Maybe I need to take some profits. Maybe I need to play with only house money. It looks like I've made a nice gain. It looks like I made $1,000 in pure profit. Perfect. I'll sell, take my pure profit, and leave house money playing. Now I'm in this trade for free, right? That's the kind of the angle you want to pursue that at, right? So just, again, we'll get deeper into it in a minute. This is just a setup video so you guys kind of understand how to set it up. Kind of you can also see kind of the things that I go through when I'm picking a stock or when I'm looking at a chart and trying to set them up to kind of read and interpret what they're saying. The last one, accumulation distribution line. This one's a little tricky because it always wants to default to these bars. So you're going to go into the wheel, always want to show the study right. You don't want to mess with anything up here. The only thing we're going to change is draw as bars. I have a preference of line, and I'll explain why, right? So consolidation is going to be yellow. Non-consolidation is going to be blue. So let me show you what that looks like before we change it, right? So now, what an accumulation and distribution line is telling you. If you have a run-up in the accumulation line, you're accumulating volume and money, right? Then you should have a up period in candles, right? Because you're building momentum, right? So you're gaining, right? However, how do you know if that is a false increase, right? Meaning you're about to have a huge rip to the downside, like something like this, right? Well, when the candles are running up, but the accumulation is running down, that's telling you people are actually selling and they're taking money out of the play or out of the stock, which tells you in your head, should tell you, okay, we're going to either soon hit a selling period or start one. And if you can see right here, I'm going to draw a line. Let me draw a vertical line. It makes it easier to see, I think. I know some of you guys watch this on phones, so it's not easily seen. But here, we'll go, where was it? Right here. So we got one right there. And we'll just go all the way down right there so you guys can kind of see it. All right. So now if you're following this line, this is essentially where we started this rundown, and it lasted all the way through here. So we'll draw another line here and go all the way straight down so you guys can get a better visual, right? So in this channel that I've now designated here, essentially is when we did a rundown, right, in price. Now take a look. We were sitting essentially right at overbought when this started. We weren't in overbought. We were just approaching, right? Stocks have a tendency to swing up into overbought and then come back down before they start to pull back. This one in SPY, it did not. It just approached the line and then all of a sudden started the selling period heading down towards neutral. Right away, once we started heading down after like a day or two, you see that we started a selling period in the MACD. Take a look at the accumulation distribution line. Look at this massive dip. This should have been the first indication to tell you something's wrong. because people started pulling money out of the play. But even though the price was dipping, this is how you also can tell there's going to be a quick reversal to the top side. Look, it peaked at the bottom and then started spiking up while the price was still dipping. That should tell you, okay, yes, people are pulling money out, but people are also putting money back in quickly. So that should tell you there's going to be a rip to follow. And that's kind of how you interpret that, right? Some of these things will take practice. Don't think you're going to just learn them on the flip of a switch and you'll be good to go. No, some things unfortunately take a little time and practice to use them, right? But with time, with hours dedicated of charting, the more hours you put into the charting, the better you will get at it. I promise, right? Now, the last one that I never show on videos because it is the most confusing is something called the volume profile, right? It is very, very confusing because people interpret it in different ways, right? It is subjective. It is a subjective indicator, and I'm going to show it to you now. So I'm going to show the study. Click OK. Again, I already showed you how to add it. Use over here, you just type VOLUME, and then you go down where it says view volume profile, double click, and it'll add it over here to the price section, right? Why? Because it's actually listed where the candles are, right? Now, all right, so some of you may be going, what the hell is this, right? All right, so volume profile is exactly what it sounds like. It is the profile of the volume now stretched over the candles, though, so you can understand what the candles may be doing in some way. A lot of you say you struggle with finding when support and resistance is, right? So let's break it down so that we go technically by what it actually is scientifically, right? So you have a point of control, which is I have designated as a red line, right? Because why? It is the point of control of the volume. You have a high profile, which is designated as a yellow line. It's the top one, high profile. And then you have a profile low, which is the bottom yellow line, right? These are also important points because this is where, so the red section, excuse me, is like the 1 to 3% of the top volume. The yellow line on top is the other piece of that volume, and the bottom is the other. Now, that seems really confusing. I don't want to get into the details because it's just going to confuse you if I throw too much at you too quick. But essentially, how you read this, right? Anytime your stock or ticker that you're looking at is trading above this red line, the red line is like the equator of the earth. It's the center gravitational pull. It's going to pull the candles back down. That is very true, and you'll see that when I show you another example in a minute. If you are trading above this, you have a higher chance to get pulled back to it, kind of like here, right? We were trading up, getting close to the high volume mark, and then all of a sudden you see this pullback. Why? Because you're being pulled back to the point of control. As this point of control goes higher, the candles on the chart have a higher chance of going higher, right? Now, anytime you break above the high line on the high profile mark, that is a super bullish sign, right? As long as it doesn't pull back and it keeps going. Why? The gray, all this gray is the volume of this essential ticker, SPY, right? This is the volume for SPY. As you can see down here, we have low bars, or excuse me, the correct term is nodes. You have low nodes, which means there's not really a lot of volume up there, so the price can't keep running on low volume. We would have to see these bars start to climb or grow so that the price or the ticker, or excuse me, the candles can start forming and keep going. With no volume, it's not going to go very far, right? This actually has a higher chance to pull back, either to the high profile line, bounce, and then go back up, right? Something a little bit kind of like this. Where's my tool? It has a higher chance to do something specifically like this, right? Because there's no volume up here, as we saw. You have a better chance of it actually doing one of these numbers, and then potentially maybe one of these numbers again, with the hope that specifically by the time it does this bounce, the volume starts to spike up here, or this point of control line starts to rise, which would then move these other nodes up higher, and now the price can keep climbing onto it. I hope that makes sense. If it's confusing, I promise we'll use it a couple times and it'll make a lot more sense, right? This is just SPY. This is just one crazy upward trend. But now let's change the ticker, right? Here we go. The one that I did yesterday, DraftKings, DKNG, right? Now take a look. What I just explained to you. The red is the point of control. This is the high volume. This is the low volume, right? Where you see these low points is normally where you get a lot of wicks. What's a wick? On a candle, specifically a wick, is this, right? This long stick. Where you see these low nodes, this is where wicks form, right? As you can kind of see from these candles, all the ones that touch into this have wicks. All of them, really? Like, they all have wicks, right? Because that's how wicks are formed, right? As you can see also, if, well, maybe you noticed, the high line is a support and resistance. Specifically, when you're below it, it's resistance. When you're above it, it's support. You see candles actually forming right on it, right? Or right above it. When they break below it, what do you get? Wicks. Why? Because on the low nodes is where wicks are formed. Hope that kind of clears that piece up, right? Now, as I mentioned earlier, anytime you are trading above the high volume, that's really bullish, right? But remember, if the volume profile is low or you have low nodes, then you have a better chance of getting pulled back. And the red line, the point of control, is like gravity, right? The center point of gravity. It's going to pull it harder to the center the further away you get from it. That's why you see this run up here. You see there was like literally no volume up here, very low nodes. So what does it do? It starts to pull back, hits the support line, because once you broke through resistance, it becomes your support. Bounce, try to go back up again. Still low volume, low nodes. You see some candle wicks forming at the top of these candles, correlating with low nodes. What do you see? A dip back in price. Bounced again at support, consolidated on it, tried to keep going up, but again, the volume is low. It's not moving, it's not spiking, which means it cannot go up. So then what happens when you have gravity sucking you down below you? It pulled it back down to the center. Actually pulled it down so hard, it broke through, bounced off the low volume, because again, why? It can't keep going down because there's no volume down here. Same scenario, just the opposite direction. You actually see wicks being formed where you have low nodes, because again, that's where wicks are formed. Then it bounced off of this support area, which was the low volume, back to the center, and look, it's essentially been trying to consolidate around the point of control. Even now recently, right, it's sticking to this point of control. It just bounced off the low volume. For some, maybe some of you that saw this dip on Thursday and then you see this green day on Friday, well, yeah, you saw the green day because it literally bounced off of support going towards the point of control, right? I really hope that cleared it up. Now, tie it with everything else, right? How do you read this? Or how do you know then if something's bullish when this is already telling you a lot? This is really just going to designate to you where support and resistance is, right? Where you have these high peaks, right? Or high nodes, excuse me. That's where your support and resistance areas are. And if you see, you actually have candles formulating on them and below them. Look, you have a candle formulating right on it, a little bit over it, right on it, right on it. In the low node area, you have wicks form, right? Or no wicks at all. And this candle has no wicks, right? And then on the high profile volume, you actually have candles formulating on it, right? Or sticking close to it, kind of giving you an indication of support and resistance, right? This is a way for some of you that don't know how to draw support and resistance. You can actually figure out where support and resistance is. And for example, let's go to another one. Let's go look at CAC. Again, look, we were below it, trading below it specifically. We went up, broke through as support and resistance. Again, when you break through resistance, it becomes your support, and the other way around as well. When you break through support, it then becomes your resistance. Once, twice, pull this back towards the point of control, consolidated on it for a couple days, shot up, tried to test high volume. Again, low nodes, so we can't keep going. Consolidated, 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 gave it another try. Again, low nodes, low volume. What did we do? Pulled back towards the point of control, bounced off that high volume, tested it once again, and then got pulled back down to the point of control. Consolidated on it, essentially, what is this? For 3.5 months. Broke below it, bounced off low volume, and then here we are now pulling back towards it. Very simple to read the chart. I know I make that seem very, very simple. I can assure you with practice, it becomes even simpler, right? Again, time in charts will make or prove to be your best investment in charting, because again, it teaches you everything you need to know about a chart without even looking at the other indicators. Now you pair it up with the other indicators and you can formulate even stronger opinions of what is happening, right? For example, we have this down run in the accumulation distribution, which is telling you money is leaving this play. We just had a green day where we bounced off the point of control. With this money in this dip below, it's telling you there's low money. So a lot of people took profits or took gains, right? So you can essentially anticipate or expect a red day come Monday. You pair that with the fact we're close to overbought and the lines are getting close to converging, starting a selling period. That has a higher propensity to have a red day, right? Let's do another one, just a real quick. I know the length of the video is kind of long. I know you guys prefer shorter videos. MFST, Microsoft, right? Oh, what happened? Microsoft. So Microsoft, here we go. You have the point of control in the middle right here. You have the low volume and you have the high volume. But now look at the difference in Microsoft. Their volume is growing. Why? Because when I told you, if you break past the high volume mark, it is bullish. If you have high nodes, the volume or the ticker can keep going, right? You see this correction back, pulled down towards the center point of control, bounced off this high volume, and now it's kept going. If come Monday we start to see that this volume profile, these nodes are growing out further out, then you see that this ticker has the opportunity and potential to keep running. If these loads stay low or you don't see this point of control line rise towards the top, shifting everything up, then obviously you can anticipate another red day. We had a red day today, right? So you would anticipate another bigger red day pulling us down towards that point of control, right? This works for literally any ticker. Here's another one I'm bullish on, HIMX. You've seen this video. Let me clear this trend line out of the way. All right, so point of control is the red, low volume is the yellow, high volume is the other yellow, right? So as we were launching, we went up, 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 broke through, hit our point of control, consolidated on it for essentially a week, tried to test high, broke through high, formulated as a support area, consolidated for 5 days, tested, saw that there is no volume, rejected, got pushed down, gravitational pull took control, pulled us down back towards the point of control. We bounced, used it almost as a support, bounced, tested high again, rejected, bounced, again point of control, tested, rejected, almost tried to test it, didn't quite make it, point of control pulled us back, consolidated on it, and then we went to test again, broke through as a false break. Why? Because the low nodes, you can't formulate or can't build candles on no volume. You need the volume. Rejected, found a support area here. Again, anywhere you see the longer nodes, it is necessarily support and resistance. That's how you can kind of build your support and resistance. As you see, I previously had lines drawn here, and it matches literally perfect with what is shown on the volume profile, right? Longer nodes indicates support and resistance. Bounced off the support and resistance here with this long node, went up, tested the high once again. As you guys can see, again, there's already a line there matching. That's a verification for me that I drew that support and resistance line correctly. Rejected. Again, we got pulled back, bounced once again off this strong support. This is now a strong support. Anytime you use a support multiple times, that's test strengths. Anytime, as many times as you test it, right? It's just building strength on that point, right? And then once again, we got pulled toward the point of control, and as you see here, we are now testing here. We had a nice massive push to the upside after earnings. Now, what can we expect to see? Well, we have a lot of volume nodes up here, right? So that gives us the opportunity for HIMX to continue building candles and growing until we get to where there are low nodes, right? What we hope happens as the price keeps going day by day, and again, we've been looking at day charts, so each candle represents a day, right? As we keep going higher and higher and higher, what we're wanting to see, or what we would like to see, as you're seeing this volume profile paired with your RSI, your MACD, and your accumulation distribution, is that this red line, the point of control, pushes towards the top side, shifting the volume up, so that then we can start building higher or longer nodes up here, so that candles can keep forming and climbing on them, right? I know this video is now approaching 30 minutes, but I hope it's an informative 30 minutes. This kind of gives you a quick fundamental of what indicators to put on your chart, kind of the real quick intro, how to read them, and also, more importantly, something that I don't see discussed a lot, how to read a volume profile and how to use it, right? As always, if you have questions, leave it down in the comments below. I will be more than happy to address them for you. You are always more than welcome to hit me up on Twitter or IG. Or as always, guys, I do have a website where you can go and reference my specific videos or any of my social medias. The website is stockhustle.net. And yeah, that is my picture, and yeah, this is my site. I'm still building on the blog section where I'm leaving detailed notes of how to read charts, how to read candles, how to read options. There's essentially an article right now in options, just basic fundamentals, but essentially under the about section gives you a little bit of my background. Episodes gives you the most viewed episodes, which I'm updating essentially every weekend. So whatever's in the week, if you can't find it, just click on the YouTube link. It'll take you straight to my YouTube page, and you'll see everything on YouTube. Twitter works the same way, and so does IG, right? But as always, guys, I'll catch you in the next one.